Hi there, traders. This is Brad Gilbert with the Daily Market Insight. Okay, welcome back, everyone. The bit of a sojourn for the Daily Market Insight, but I thought we'd just get things cranking, just try and sort of direct you on where things are moving and what's connecting with what. So just having a look at the global markets, right? So I've got a few changes here to my Metastock setup. Got the equity markets at the top here. Now there's been a fair bit of carnage on the equity markets year to date. Okay, down about 10, 15%, especially for the NASDAQ, which has really been the big gainer over the whole pandemic. The sort of key part to this is there's been a really nice sort of rebound. You'd expect this to happen, right, over the course of a week when it gets sold off, the equity markets get sold off pretty badly. So, but week to date, I mean, these things are still in the red. Month to date, more so, and year to date, still pretty heavy. It's not over by any stretch, right? To me, this is a slight correction across the board. And if I just show you the sort of the global markets, just give you a bit of a snapshot here. So the dollar index, yep, heading topside with those equity markets rallying. It's a risk on, risk off situation. So the dollar sort of just dribbling lower on the day, but overall still way up. The euro floundering, but it has bounced. Market's got itself so short euro, especially under 110, massive clean out of stops. But until this Russian-Ukraine issue subsides or diminishes, it's still a sell on rallies as far as I'm concerned. Now, dollar yen, safe haven, well, it's caught between a rock and a hard place. There's so many big global events happening. The US dollar is a safe haven in itself, and so is the sort of yen. So it's really not going anywhere. Now, as far as commodities, leading the charge is oil. Huge move up to 130. We're seeing massive volatility in this sucker. It's huge, right? Up to 130, down to 103. It's like a 17% move back down, right? So this thing, a 1% move is big, like let alone 17% in a day. So just be careful. Like it can't be sustained. And that move back down here is OPEC, coming to the rescue, I should say. It's like hilarious because they're usually screwing the market so much on supply and demand. But OPEC and Iraq saying, well, we'll increase supply, take the pressure off the oil prices. But I tell you what, they're going to be cashing in at these higher prices. Of course, you want to make some more oil. Now, the S&P and the NASDAQ, as I sort of showed you on the data there, both drifting lower. Now, most important part here to me, just looking at the overall aspect here of what they've got, the sort of 200-day simple or smooth moving average is something that a lot of fund managers use to sort of determine if an instrument is in a bearish mode or bullish. To me, NASDAQ's been up and down through it, and NASDAQ has been the key. As I said, all through the pandemic, it was the one thing. Obviously, tech stocks, everything online. Now, I can see this getting crunched. The S&P yet hasn't quite moved through that level yet. So still, as I said, this recent move or yesterday's move in the US equity markets, right? A nice rebound, but the pressure is still on. Now, when you come across and you're looking at various instruments, Bitcoin, right? It's been getting a little bit whacked. If anything, and I'll come back to the data in a second, you can start to see it's actually moving pretty closely with the US equity markets, but it is under pressure, but stabilizing at the moment. And for those punters looking for another bit of a safe haven, once again, on the commodity side of things, or metals, gold, massive rally on all the risk around Russia, everything else combined. But once again, it is drifted off as well, pretty much in line with what oil has done there as well. So once again, the commodity instruments there are experiencing massive volatility, right? The volatility index itself is up around 35. Now, it usually sits around 10 or 15. This is the volatility is here to stay. Now, don't be afraid of the volatility because that actually gives us opportunities. When there's volatility in the market, it's easy to work out what's going on, right? So, just coming back to the main data here, as I was sort of saying, if you look at the cryptos, right? You look at the month to date, year to date, they're not too far off what's been happening on the US equity markets, right? Now, where are we going today? Well, let's just have a look where the main driver, and it's once again, it is the equity markets. You've got to be looking at the US equity futures. Now, they are back in the red. You'd expect that after such a big up day in North America during the day, of course, that's going to subside during the, when the market's shut, right? So, but you know what? It is red, but they have hardly moved. The market is anticipating the overall market's next move. So don't forget, when you're looking at the whole market as a whole, like the commodities, for instance, right? So oil has been so dramatically sort of getting whipped about, as has gold. It's hard to sort of work out what's driving what. Now, the fact that OPEC and Iraq are going to be increasing oil supplies should see oil dribble off from here, right? Should see it continue lower. That will sort of fill in the hole that Russia's sort of left there. Now, if you're looking to sort of connect the dots, depending on where you're trading from, right? The North American session is the epicenter, right? So you want to be watching the US equities, as I said, in a lead up to that market opening, US equity futures. But that is going to be a direct lead into global equity markets, Aussie, Kiwi equities, Asian equities, and also the European equities. European equities week to date, pretty good. I mean, as you'd expect, they've all bounced on the daily side of things, but the US equity markets, the European equity markets doing a lot better. There's talk about the ECB coming out, issuing some sort of bonds or some sort of miracle cure to sort of raise money for defense and spending and recovery stuff. I mean, same old sort of dribble, but just be aware there's plenty of news going on. So look to connect the dots. Now, the easiest thing for me when I'm looking at this global markets page is, if I just get the pen up again, like looking at the US equity markets, right? US equity futures, bearish. I mean, that's for tomorrow. But on the scale of it, for the Asian session in particular today, US equities rallied. That's a risk on sort of scenario, short term, right? So you get the dollar index bouncing. You still got the euro, sterling, Aussie, Kiwi sort of falling. That doesn't actually really match up because you'd expect it was in the other way around a few hours ago when I was looking at this. So is that risk on, risk off profile sort of working? Well, not really. As I said, this is a short-term bounce. The overall aspect of what's happening on the US equities is down. So the overriding sort of medium long-term risk profile is still pressure on the risk assets, Aussie, Kiwi, CAD, and you've got the dollar rallying against the other pairs. So just be aware so that you can see what's happening when you line the data up like this. Short-term equity, US equities bounce, but you know what? They're still looking terrible, still going down. That's where we're still got a risk off profile on the currencies there. So don't get so caught up in euro and these things continuing to bounce whilst those US equity markets remain under pressure. And I'm talking sort of, weekly, medium term and year, they're going to remain under pressure, right? It's got to be the way of it. So you come back and have a look now at the Forex markets. You're looking at the sort of key data. Is it going to impact? I don't really think so, right? Not at this point. It just doesn't seem like it's a valid thing that's going to happen. The dollar index, well, I've got a couple of support and resistance here, but those orange trend lines tell me they're only got a couple of touches, not that important, right? So once again, easier to differentiate what's going on when you set your machines up or your dashboards like this, because you can see exactly what the impact from the equity markets is on the majors, down through the commodities, risk on, risk off, safe havens, and you've got the US bonds there too, just to keep an eye on things. So just having a look at a quick flick through the currency charts, the majors here. I've just got the daily charts up here. Once again, you can start to see this 200-day moving average right in the middle of the dollar Swiss. The dollar index, well, it's well above that level as it is on dollar yen. Dollar CAD, well, it's whipping up and down there, but it's going to get heavily influenced by the massive volatility in oil. For sure, euro, well, it's very bearish, well below the 200-day moving average, and sterling's down there now as well. The Aussie and the Kiwi, well, these two pairs, they've got sort of mixed things going on. Now, the economic conditions aren't like fabulous, but they're so far away from the issues in Europe. There's a lot of money going into the Aussie and Kiwi economies, right, globally. So that's something to sort of weigh up as you sort of go through your trade day. Looking at these pairs now, if I just clear that, let me just come over to, I'll just whip you through the various charts here on the equity markets. I've lost the Dow there for some reason. So you want to get the picture here. See these massive moves. These are all daily charts. Massive down moves on the equity markets. Here's the volatility index. I just want to show you the extreme levels back to when the pandemic kicked off to where we are. It's still pretty high. And you've got the NASDAQ and S&P, right? So the whole, I can't see the Russia-Ukraine issue sort of subsiding, and this is what's going to keep pressure on the equity markets. If there's any sort of issues with those nuclear reactors or anything like that, you're going to see these things just fall out of bed, right? So just be aware of that massive pressure on the equity markets. Now, if I come back, just give you a look once again at the cryptos. What I've done here is I've actually broken these up into, you got the hourly charts at the top and the daily charts at the bottom, just for the Bitcoin, Litecoin, and Ethereum. You can see here the battle that's going on here around that 200-day moving average on Bitcoin. Litecoin, well, it's under that 200-day moving average. So it's definitely in a bearish mode. And I tell you what, the Ethereum can't sort of really work itself out too, battling away there. Is it bearish or bullish? Well, it's under pressure, but we're not seeing too much activity just at the moment. And what else we got there? If I just switch back over, commodities. Okay, so looking at the various commodities, as you know, oil. I mean, I've got oil here on a few different things. I've just got them in the normal sort of color so you can actually see what's going on. But, massive volatility in light crude and Brent. The copper, it's sort of drifting lower as well. That should put downward pressure on the Aussie. And precious metals at the top, well, massive rally and then sort of coming back a bit somewhat. And iron ore continues to rally there. That's the offset, right? You get copper coming off, iron ore going up. Bit of two-way pressure there on the Aussie. Probably a good reason why it's sort of just tracking sideways. All right, so it's pretty extensive coverage. Now, I won't be probably going into too much depth as I move forward, but just wanted to give you a bit of a look through the various aspects. The easiest way to follow these markets is understand the connection between the various financial markets. It's very easy then, whether you look at the equity markets, treasuries, or currency relative strength, to see exactly what's going on. Now, if you're a stock trader and you're looking for what's going on in the sort of Dow in the instruments there, you can actually click on these the headings at the top. You can go through and see which companies are under pressure, which ones are outperforming. Chevron, obviously, with oil going through the roof, is they're having a great old time of it. The rest of them, well, not so much. It's a lot of red there, so that's obviously why the Dow Jones is heading a little bit south. But that's all you can sort of do at that point. And obviously you can go through and check out the S&P 500, etc. as well. You'll find if you're looking to trade those individual stocks, it's a good way to just quickly go through, especially with these red bars and the blue bars, a nice way to find out what's happening across the board there. And you can do the same, obviously, for most of these other international major indices. All right, guys. So good to be back online. I'll keep you updated as I go forward from here on what is happening in the markets. We'll try and connect the dots and make some cash. All right, everyone. Good to see you again. Cheerio.